late 2023 showed signs of inflation easing across most of the world and in the US in particular. Do you see this continuing throughout 2024?
Well, thank you, Eugene. And yes, Happy New Year to everyone. My goodness me, here we are, a new year, and so much to look forward to. 2023 was a fascinating year. And I have no doubt, Eugene, that 2024 will be equally as fascinating, if not enthralling. So your first question with regard to inflation, yeah, that was a key story for 2023. We saw a deceleration in the rate of inflation pretty much across the world, in the United States, across the Eurozone. In fact, in China, Eugene, as you know very well, we've actually got outright deflation, both at consumer price level and at the producer price level. And perhaps we might even touch upon some of that later in our conversation. In terms of the trends for inflation in 2024, I think we'll continue to see an easing in the headline rates of inflation. We've seen, energy prices being so much better behaved. Also, food prices critically, we're seeing a deceleration there. And in the United States, as you know, a significant part of inflation is, of course, shelter inflation, housing inflation, which comprises about 1/3 of the overall consumer price index in the United States. And we're seeing a deceleration in that. As you recall, Eugene, in 21 and 22 in particular, it was that very sharp rise in shelter inflation that served to elevate overall inflation. So the core thrust of the outlook for inflation is a continued deceleration. Of course, all eyes on that magic number 2% that central banks around the world generally try and achieve or highlight as their target rate. I think getting down to 2% is going to be a little bit tricky because we still have some fairly sticky service-based inflation, which is being somewhat stubborn. And also, of course, right across much of the developed world, Eugene, we are seeing some upward pressure on wages. So I think the journey to 2% is going to be a rather challenging one. But at the end of the day, that big inflation shock that we saw a few years ago now, I think is in pretty much the rearview mirror.
Yeah, no, I think we all agree that inflation has rolled over. It seems to be a bit stickier though in Australia. So I want to hear from you about that as to why perhaps some commentators would suggest that it might take a little bit longer in Australia to get inflation back to that magical 2 or 2.5% level, and perhaps what that means for interest rates. And then if we move through inflation, because why we're really so interested in, or a major reason as to why we're so interested in inflation is to see how that impacts on interest rates. So I want to talk about what you think we're going to see in 2024 in terms of interest rate cuts. Hopefully, I think everybody's hoping for interest rate cuts and no more increases. I think general consensus, well, Reserve banks seem to be talking about 2 to 3 in Australia, 5 to 6 in the US. That sounds a bit optimistic to me. So can we hear your thoughts about some of those aspects?
Yeah, this is such a critical area, is it not? Hopefully we can now breathe a bit of a sigh of relief that we've seen the worst of it in terms of interest rate hikes across most of the world's major central banks. If I may, I'd like to start with the United States. Clearly, at the end of last year, the market got very, very excited and started pricing a so-called Powell pivot, and the expectation that the first rate cut by the United States Central Bank would come in March, and that the market was also, by the end of last year, pricing approximately 6 cuts in the key federal funds rate. I feel right now that the US Central Bank is going to be a little bit more timid than perhaps the market is expecting. I don't think we'll necessarily get the first rate cut in March. However, I do see a significant series of interest rate cuts by the US Central Bank in 2023. And the other thing that really complicates the monetary policy calculus, Eugene, is of course the political calendar, and I do want to spend a few minutes later in our discussion on the US election, which is obviously November 2024. But ultimately, I do see the key federal funds rate coming down. Is it going to be 4 or 5 rate cuts? Let's kind of wait and see. And I'm happy to be data dependent because, of course, the US central bank is. In terms of the Eurozone, again, the market is pricing several cuts by the ECB. However, at the very recent World Economic Forum meeting in Davos, a number of ECB governing council members spoke either on panels or in actual formal addresses, and they pushed back on the market narrative of significant rate cuts and then coming early. So I think both the ECB and the Fed are going to be somewhat cautious, somewhat timid, and kind of wait until perhaps the second quarter to really start cutting rates. Let's talk about the Reserve Bank of Australia. I think you're right. I think the Reserve Bank will be one of the more timid of the central banks. Our inflation is higher and proving to be somewhat more sticky than it is in the United States and also in the Eurozone. And obviously, don't forget, we've got a new governor at the Reserve Bank of Australia, Michelle Bullock. And I think, when you're settling into a job, you're probably going to be a little bit more cautious. Obviously, the RBA raised rates, which disappointed the Australian government, which I think foolishly had kind of implied that the Reserve Bank didn't need to raise rates any further. I think that painted the new governor into a bit of a corner because Michelle Bullock had to kind of demonstrate her autonomy and independence from the political machine, from the government. So inflation here in Australia is probably going to be higher than what we're going to see in the Eurozone and the United States. I think there's several factors going on here in Australia. First and foremost, we have this massive surge of immigration into Australia in 2023. And I don't know if you've got any numbers, but it could have been by the end of the year about 750,000 new arrivals, which is a really significant number in the context of a relatively small population. So, when you arrive in a new country, and as I did to Australia in 1997, you have to go out and buy carpets and sofas and fridges and microwaves. And I think that really was a big stimulant to the economy in 2023, notwithstanding the very sharp rise in interest rates. And then on the energy front, all of us, whenever I look at the energy bill, the electricity bill, the price of gas, the price of electricity, everything seems to still be kind of moving upwards. So there are some stickiness in terms of utility prices. Wage inflation here as well. I mean, our labor market is really, really very tight. And you continue to see just walking around help wanted signs. And I know that the very latest employment report in Australia saw a stunning decline in full-time workers. I actually challenged that data. I think the Australian Bureau of Statistics has got a problem with its employment model. But the bottom line is wage inflation here is certainly has been moving upwards. So I think the Reserve Bank is going to be very, very cognizant of that and actually going to be relatively conservative in terms of the rate cutting cycle, and will certainly wait until the US central bank and other major central banks have actually started cutting rates. I think, will be the last cab off the rank when it comes to rate cuts, Eugene.
Yeah, no, I would agree with that. And I think, central banks around the world do have in the back of their minds, the 70s. They're trying to balance this issue of, trying to stimulate the economy, but also they don't want inflation to come back. They want it dealt with. They want it back in its box.